right, hey guys, Sam here with you on Thursday, September 20th, kind of middle of the day. Now, as it's a Thursday, we're going to look at traditional assets. So as we do on these days, we poll our members, let them choose what gets analysis. So I'm glad to see some equities finding their way in here to the requests. So I've got StarBucks up here. So this is pretty straightforward. Now, I'm working off the 2009 low here, but just to put that in context, I've got to go back to the 3-day here so you can see. So this is our absolute lowest low. So, you know, pretty hard not to call that anything other than 1, 2, 3, and perhaps the 4 is in. So as I go back to the daily, we can get a little more detail here. So we can see from our 2 low here. Well, it's all the subdivisions there. So we've got it's close here. So this just barely qualifies. But from our degrees here. Right, so we get very shallow retracements. So we get our 1, very shallow 2, right? But that's all we've got to work with. I can get 5 into this 1. I get a little ABC for my 2. I've got the subdivision I need here to give me the 3, ABC, down I go. And then we get some volatility here in the 5th where we've got, you know, this wick here, interestingly, doesn't threaten the 1. So we get 1, 2, 3, if that, you know, that's something crazy. And then we get up here and we get our pivot. So essentially, we've now, it would appear to me that we've got a WXY. So we've got an ABC followed by an ABC followed by an ABC. So we can look here of just working at this level here. All right, so if this is ABC, well, we get just a couple shy of the 786. Remember, that's always a push, that B wave, always a push to try and get to the highs that fails. Down we come, to and through that first target, but I think you've got, let's see, let's check this here. This looks like we might have some relationship there. So we're kind of in between here. So we don't get a perfect tick here. There's nothing really here, but it's hard not to acknowledge that pattern. So if we look at just basic ops here, so if we take our wave 2 low and we pull it up to the proposed wave 3 high, well, we've come, here's our qualifier, anything from the 23 to 38. So it's shallow, right? It's a very strong market, obviously. But so all the subdivisions there, right? I've got a good 3. I've got a nice 3-wave correction here with some complexity to it. The symmetry is not terrible. So this is a real contender. So question is, if that's my 4 low, and we've had the complexity here, well, obviously we've got a contender up here. We've got an algo target here. And then, you know, we can also just do a little experimenting working from some of these other pivots to see what could something else have been used that might give us a near-term target. So from our 4 low here, so this completed 5-wave structure here, I'm kind of eyeballing that, going, again, nothing perfect, but it's, you know, that's just one to be mindful of in terms of any short-term targets, our long-term target here, and that would complete it rather nicely here. So I got to go back to the 3-day to get you the whole thing. So if we think about where that might put us, if we're right about the 4 being in here, so if we did, again, just sort of basic ops here, we take, we don't have to go, that's why I draw that little yellow line, so I don't have to go all the way back to the left. But so look, we look here, and we go, okay, if that's the length of the 2, well, we're through the 2618, so we know we have an extreme in the 3rd. So if we think about target projections for the 5th here, so I take the length of the 1 projected from the 4, and I get some confluence up here that gives me a target. So that's certainly worth paying attention to. So I'd be very mindful of that as a target. So that's up here at, well, let's call it, for a round number, let's call it 80. We're sitting here at 56. So lots of upside there. So where's the trade? Well, if the 4 is in, which is a reasonable assumption, it's technical, we've got pattern, we've got price. It's all there. So if that's in, well, now we're just looking for the so this would be our 1 wave of our 5th wave. So we're just looking for something like this. So if this is the 1, and right now we're at the high, so we don't know where that pivots, but ideally we're looking for something like this to get us up there. So where's the trade? The trade is here in the 2. Right? That's the next opportunity as far as I can see here. So if this is a 1 coming off of the of the proposed 4 low after our WXY. This is our good 4. Well, we're looking for this 5 to follow that kind of roadmap. So pretty standard. No reason, as I'll often tell you, there's no reason to assume that's going to fail. I mean, just it's very technical, all the subdivisions there. I've got a good candidate for my 4. So again, as I will often remind you, you trade them till they fail. There's absolutely no reason to think that that's going to fail. So let's go back down. Let's see if we go into the 4 hour and see if we can get any read on what's happening here. So let me move this down a bit. Okay, so we know what we're after. Hopefully we've got some sort of a 1 coming in play here. So let's see. So actually, I'm going to take this as getting a little funky here. So let me pull that off here. Okay, so do we have a candidate here? Well, so where's your first retracement would be right here. It's not gorgeous. So you know, I might let that get a little bit more definition. So even if I go to the hourly, let's get that reset here. So 1, 2, 3, 4, so maybe. So you've got nothing with any depth, right? So other than this, what looks like, so this would be the pivot here. Even if we use this pivot here, so this gets a little squirrely. It looks like that's all happening within that 1 hour bar. So you might, boy, I'm more inclined to call that an anomaly. So 1, 2, 3, 4, 5. So let's see if this is a contender here. Be mighty shallow for a 2 wave. So that looks more to me like we'd have to go 1, 2, 1, 2, 3. Oh, shit, that won't work either. All right, so because we can't have a diagonal. So we can't have 1, 2, and then 1, 2, 3, 4. Because we'd have a diagonal, so we could, all right, so we could have, we could have an extension here. So we could have, so if we look here, let's work backwards. So this is our pivot before we go, come here. There we go here. All right, so there's perfectly technical, right? So we come right to the 618, and that looks to me like that's potentially 1, 2. So this has to be 1. So meaning we'd have to look at it this way. So we'd have to think, okay, well that's the 1, that's the 2, and then we're going into 1, 2. Shit. Nope, can't. Let's see. Let's bring this over here. So that would be 3, 4, 5. So if that were 1, 2, then this has to be 1, 2, 3, 4 of. Okay, so we got to go this way. So this has to be 1, 2. 1, 2, 3, 4, 5. So potentially the 3 of 3 is going in. We're waiting for the 4 and waiting for the 5. So let me get this all up here. Let's change that color. Let's get it green. Let's go up a degree so we can keep track of where we are in this count. So if that's 1, we've got to allow for the shallow 2 here. So this volatility is not ideal. So ideally we're going to always wick off our proposed wave 1, so that eliminates this as our third. So it looks like we go 1, 2, and now we're yet again in another 1 wave. So we're going to have to be patient waiting for a decent sell-off. So here's the pivot we're working from. If that's 1, 2, and then again 1, 2, we're just waiting to get some. So let's measure it. So from this pivot here to the 1. Right on that. Okay, so here's a reasonable target for the third of the third, 4 and 5. So all of this just rolls up. So we keep track of where we are in this count. So if that's 1, 2, 1, 2, 3, so we're looking for this. So if this goes to 3, then we'd be looking for an A, B, C into the 4, and then we're going up for the 5 of the 3, which would set us up for the 4, 5. God, that annoys me. All right, so 4, 5. So if that's the 2, so let's think about that, where that might put us. So if we're going to go up here towards some of these targets, so that sets us up rather nicely for this and then this. Okay, so that would be right here. All right, so that puts us at 61. So that would give us a completed wave count. We can't complete here. There's very hard for me to get this to complete as anything other than a 1, 2, 1, 2 because of the overlaps. All right, so I overlap here, so I can't have my impulsive structure here. So now let's pull that back out. Let's go to the 4 hour. Let's go 3. See what kind of context that gives us. All right. So if we're coming off of that, right, we know we've got targets way up at 80, and we're just trying to get a good, clean, technical 5-wave structure here that we can work as a 1-wave. Now we can have a diagonal here, right? So we could have some overlap because it's a potential 1-wave here. We got to be careful about that subdivision. So if we were to finish here as a 1-wave, then we would be looking for this. So if, again, hypothetical, if that's 1, then we'd be looking for our 2, 3, 4, and 5. So let's get that. We'll go put it in blue. Let's go up a degree or 2. Let's go to minuet. Okay, so if that plays that way, so we just, again, the idea here is just building a potential roadmap so we can kind of keep track of it and see if it's going to follow suit and give us some sense of where we are in the count. So it's very hard to get anything complete yet, and we've got very shallow retracements. So if we're going to come up to something like this, well, then it's just a waiting game here to let this finish. 1, again, I'm just hypothetical here, looking for something to top out so that I can look at it and say, okay, well, that's a contender for my 1-wave, and then we'll wait for, of course, the 3-wave correction, right? And then we're looking for the 3. So if that's going to play that way, if that's my 2, so it would look like this. Up here, again, I'm hypothetical. So here's the trade we're looking to map out. Right now, we've got to allow for, again, it's all hypothetical. It's just, where's the next opportunity? Well, do you want to be a buyer here? Is it screaming higher? So again, this is just, conditioned into me from many years of doing this. I just refuse to buy something that's going straight up, right? I will buy something that's coming down, but that's going straight up. So what are you buying into? Right? There's nothing to latch onto other than if you want to be a momentum trader, I guess you can make an argument there. But the first thing that I see is just right off the bat, it looks like we've got trend line resistance we're going to run into, and we can just do the same thing here. It looks like this was not insignificant. So we had some sort of a pennant type of formation or a flag formation, but no way to complete this yet. So we got to wait for a motive wave here to complete. Again, could be a diagonal because we're looking for a 1-wave, but I've got to get some 5-wave structure to complete here, and then I need a retracement off of it. Right? Then we sit and we wait for the 2, knowing that if we can be a buyer, again, I'm hypothetical here. I don't know where that wave 1 high is. But if we finish with something like this, then the opportunity is down here between 50, let's call it between 54 and 52.5. So you've got a $1.50 range here in the mid to lower 50s with a target of 80 up above. Right? So if we put that all back together in terms of back to our daily and where our upside targets are. All right, so knowing we've got this big range up here, so how are we going to get there? All right, so it would look like this, like this, like this. So we're trying to catch the 2 into the 3, knowing that likely there's going to be a 4 and then a 5. Right? So that's the proposed roadmap. So what do you do with that, right? So you go, okay, that's cool, great, right? Well, how does that help me now? Well, yeah, I understand what you're thinking, right? You want to come here and say, where's the trade? Well, again, so how else would you do this? All right, so if you're just buying that momentum, at some point you're going to have a retrace. Well, let me rephrase that. The odds are that if we get a 5-wave structure coming out of this, at some point there's going to be a retracement. So for whatever reason, people that bought down here, it's going to be overwhelmingly tempting for particularly the shorter term traders to want to take some profit, particularly as that starts to come down. So the idea being, if we go from swing low and we eventually get a pivot up here, we know from just millions and millions and millions of examples of it, not to mention at least, I can't even imagine how many 1,200, 1,500 examples I've shown you here of where we wait for that wave 2 to come to the 50. So why do we do that? Because then we get an algorithm that's with us. Right? So we know that eventually when we pivot up here, that on that first retracement, there'll be software written to go from dominant swing to dominant swing. They'll start buying at that 50. Right? So then we use the Elliott count. This is, I show you this every day when I'm doing these videos. We're trying to use the Elliott count to get in sync with what the algos did last, right? And this is the only algorithm that I know of where we can identify its footprint. So you can say, well, you know, Elliott Wave is bullshit. Yeah, but whatever. You don't want to use the Elliott Wave? That's just fine. That's just fine. Swing low, swing high, first 50. Right? I'd like to think anyone watching this channel is beyond having to question whether or not that's legit, whether or not software will kick in there. Now, again, that doesn't mean that it's a guaranteed winner. But if we use the Elliott Wave in conjunction with that and say, well, if that's a wave 2, we know the wave 2, high probability between the 50 and the 618, yet I also know that an algorithm is going to start buying at the 50 and is going to defend to the 618. Right? So that's the whole idea. Right? That's how we combine the two. Then can I get a pitchfork in that to give me some market geometry, to give me any additional structure? So again, I don't know what this pivot looks like or how long that's going to take. But if it were something like this, right, then there's your wave 3 target. Right? You see how we try and put the whole thing together. It's always a combination. Can we get price? Can we get the algo footprint? Can we get the Elliott Wave structure? Can we get the market geometry? Can we combine all of that and get a potential roadmap, right? And you don't need to get this 10 out of 10 times. But I promise you, if you're consistent about this and you're disciplined about where you waiting for the entry, so you go, shit, oh, it's going up, I got to buy it. No, I would not advise that. I would encourage you to let it complete. Don't let FOMO, oh shit, Starbucks on the move, I got to get in. Don't let that get the better of you. That's almost always a mistake, right? And when there's told you many times, the market has just an unbelievable capacity to punish mistakes. So buying it on the way up, I just would never do it. I just wouldn't. Right? Why do you want to pay retail when I'll wait for the 50% off sale? You want to think of it that way. So can we complete a pattern here? Right? And a 5-wave structure, right? So whether you buy into Elliott Wave or not, can I get a swing, right, and start a retracement, right? Can you buy into that? It's from a swing low to a swing high, and we retrace it, right? Well, you don't want to call it a wave 2? Fine, okay. Well, there's your 50%. Call it whatever you'd like, right? But then I would encourage you to put a pitchfork on it, because if that pivot holds, you've got the best odds in trading working for you. So look here, what we combine. Right, so if we can get a corner pocket here. Now we have 80% probability, big assumption, if that pivot holds, if this pivot holds, 80% probability of making the median line. It's the highest odds in trading. I've said it 1,000 times here. So if we can combine the market geometry with the fact that there's an algo that's going to be written to start buying here at the 50, all the way to the 618, we'll defend it down here. Now we've got the 80% probability of the market geometry working in conjunction with the algo buy, right? This one footprint that we can identify with an algo buy at the 50 with an Elliott Wave count, right? So that's called confluence, right? That's the whole heart of everything we're trying to teach you at Trade Devils. It's all about identifying those confluence so I can increase the probability. Doesn't mean it's a guaranteed winner. Doesn't mean you're not going to get stopped out. Let me be very clear about this. You're going to get stopped out far more times than you're not. Let's be absolutely clear. I'm not telling you take this trade, you're not going to get stopped out. What I'm telling you is if you maintain the discipline and you take that trade every single time you see it, you don't need to be right 10 out of 10 times. You can be right, if you're good with your money management, you can be right 3 out of 10 times and have a very, very, very good year. Right? It just takes one of these. Right? Make your year. Right? So you can just, it's the discipline. Where can I find it? And can I combine all of those components? If I can, you have to take that trade. Well, let me rephrase that. If I see that's zero. I don't even hesitate. I can't buy it fast enough. Right now, would I buy the whole? Would I back up the truck at the 50? No, because I know that there's a chance it might go down to the 618. Right, still could be a 1-2. So I might take my first. So if I'm going to take half of my position, I might start buying at the 50. The second half at the 618. Right, now, so why do I do that? The reason I like that is because I can put the stop on the second buy is much tighter. So the risk is lower on the second one. So even though I'm adding to a loser, I'm averaging down the risk total, the risk profile, because the stop is so close to the second add. The assumption is that the pivot holds. If the pivot doesn't hold, then I don't want to be in it. I'll take the stop. Right? So you do the math. Can you afford, if you're stopped out, if it's a full stop, can you afford it? And if it's going to go lower, because we know a wave 2 can, right? Now we're eliminating some of the algorithmic play here, and we're going more Elliott wave. Now we've got only 2 of the 3. Right, do you follow me? So if we get a 3-wave counter trend, it goes to the 786. Well, that's technical. We've seen that many times. The 786 it's always a push for bears to try and break the low. They're looking for new lows, right? Those momentum traders, right? Just like the B wave is always a push to try and get that high broken that fails, and then it rolls over. So we could have pattern here. We could have an Elliott wave pattern here that would be consistent with Elliott theory, right? We'd still have again, assuming we pivot up here, right, and I get a 5-wave structure. I've still got a 3-wave counter trend. I'm still within the probability zone of where I might find a wave 2. It's higher probability that it's found between the 50 and the 618, but we've seen this many times. So if it goes down here, well, now what's the only thing missing here? I don't have an algorithm working with me here. Right, because they will see, in actual fact, right, they will have flipped to the other side. So let me just show you what I mean by that, just so it's clear here. So if that comes down that way, let me take this off. Take this off. So if we're a buyer here off of pattern, right, so we'd have the 3-wave counter structure. So maybe we go A, B, we get a nice 5-wave structure into the C. The one thing we don't have is an algo working with us now, because the algo is going to work against you, right? So look here. If that were the pivot, again, this is all hypothetical. If this market starts to come back up, let's use this. So if we start to come back up here, that's where the algorithm is going to kick in on the short side, right? So now you're working against the algorithm because they're looking for that. Does that make sense? Right. So here, if we hold at the 618, we got all 3 working for us. If we break and go to the 786, we don't have the algo behind us, and that's the fuel that we need. So doesn't mean I wouldn't take this trade. I just recognize that when you run into that 50, it's the exact same thing on the other side. There's always a competing algo. There's going to be that will defend here. If it breaks here, well, now we flip again. Now we get the algo working for us. So if that were to happen, let me clear this up. So if we break coming back up, if we break here and we break this, now it's the next 50 that they buy. Right? That's why they can keep doing it, because eventually they get on the right side. So let's say it broke here. So we had this. See if I can put this together for you. So we had A, B, we have a deep C. Right? We start coming back up and we break the 65. Right? Now we have the algo right on coming back this direction. So now we go from here, this pivot. Right? You see it? So now we're looking for, now we get algos back on our side. So you go, well, wait a minute. How would that work? How would that work with as it relates to the Elliott count? Well, let's say this is ABC coming down here to our 786. Let me close that. Now, this goes up. We get through, for whatever reason, right? Market's strong. The trend is up. We get through the 65. Right? Now it doesn't matter where eventually there's going to be a retracement. So if it gets through here, the next retracement is the next buy. So if this is going 1, 2, then this is the 1, 2. So we're buying yet again at the 2 in the high probability zone. Now we've got pattern. Let's put the whole thing back together. All right. So now I get this. I got this, right? So remember, this went 786. It broke that first one. Well, now I'm looking to get up here for my third. Well, how am I going to get there? I'm going to get there in 5. If it's going to be a good third wave, we're going to get there in 5. So again, we don't know where that pivots. Could be here, could be here. Again, you're trying to use that geometry to get a handle on where it might go. So it might do something like that. So then this would come down here. So then this would be shorter. So maybe we get something like this. Then we go up. Again, we don't know. This could all move over here. Right? We know we have from down here, we have 80% probability of making the median line. That doesn't change just because we went deeper. Still, from that pivot, as long as that pivot holds, 80%. That doesn't change. We use the geometry, so it's a leading indicator, right? So we have a time component. Does it hit here? There's the algo target. Does it hit here? There's the wave 3 target. We're going all the way here. Here's the wave 3 target of the larger degree. That's what I'm trying to get you to see, is that it's always trying to get in sync to a large part what the algos do last, right? So if we can track this, we know what they've done, because we can just measure it. Where are they? What did they do last? Right? That wave 2 into the wave 3, that's the one we're always looking at. Where are we wrong? Right? We break this pivot. Right? That breaks the 80%, right? So this could go deeper. It could go deeper. We could go down here. Right? But now, yet again, now we don't have the algos working for us. We still have an 80%. At some point, there's a pivot. As long as we don't break this, that 80% still holds. At some point, there's a pivot down here. Right? The deeper we go, the lower the probability that we're going up here. Doesn't mean it can't happen. It just means lower probability. And as soon as you break the 65, then you got to fight through the algos on the way back up. Right? Does that make sense? It's trying to combine the two. That's why I'm always showing you where are the algos? Where's an Elliott count that I can get my head around and go, okay, all right, there's 5. I'm waiting for 3. Where's the 50? Can I get a pitchfork around that? Would that make sense in the larger count? All right, guys. Boy, didn't mean to go that long there. Okay, with that, I will wrap it. I've got one more here. We're doing traditional, so I'll be back with a look at the S&P. All right, guys. That's